there's two moments in the cycle of a mine that are the two most exciting things, and one is the moment of discovery in exploration, and the second one is that first bar of metal that comes out of the refinery, and you sell it and you get some money for it. And I've been through both of those, and they're both equally wonderful. So I'm now looking forward to that second one.
Today, we're diving into one of the most advanced construction-ready critical mineral projects in North America at a time when copper shortages, geopolitical tension, and supply chain security are finally causing politicians to act rather than talk. But before we begin, Generation Mining Limited has paid Maximus Strategic Consulting Inc. for marketing services, including the production and dissemination of this video. Maximus Strategic Consulting Inc. is the owner and operator of Pinnacle Digest. This is not investment advice. Please read the full disclosure at the end of this video. Joining me today is Kerry, Knoll, Executive Chairman of Generation Mining, a veteran of the metals and mining industry with decades of experience across commodity cycles, capital markets, and mine development. Kerry, welcome. It's great to be with you.
Yeah, it's good to be back.
So what a day for the metals. You know, Palladium's back above 2,000. Gold is on fire. It crested above 5,400. You know, let's talk about copper, which is, flirting with $6, critical metals. How does this moment compare to, anything you've lived through in the past?
Well, it's obviously unprecedented in most of the different metals. So it's what we miners have been waiting for all our lives, and it's finally happening. But you mentioned copper, so we're as you mentioned, a critical mineral mine. We are going to be producing copper and four other elements: palladium, platinum, gold, and silver. So we're a multi-element ore body, and the copper is the, I think it's right now the second most significant metal, but it is significant. 42 million pounds a year. That's over 200 million US dollars in only one of our five elements, and that pretty much covers our operating costs, just the copper. So what about copper? Copper is clearly, if you read the financial press, copper is clearly not only in a shortage, but heading for a worse shortage. And that's even if electric cars totally stall and data centers didn't happen, copper is still in a shortage. And there's a bunch of reasons for that, but there haven't been a whole lot of new mines built. And there's probably only 6 or 7 going to be built by the end of the decade. According to Robert Friedland, you need 6 new mines a year, and we're going to get 1 and maybe 2. And that's just to maintain the status quo on the rate that copper consumption has been increasing for the last 50 years.
Yeah, Friedland was speaking at the Energy Business Summit a few days ago, actually, and I'll quote him. He said, "We're consuming 30 million tons of copper a year, only 4 million tons of which is recycled. That means to maintain 3% GDP growth with no electrification, we have to mine the same amount of copper in the next 18 years as we mined in the last 10,000 years combined." It's
an astounding statistic.
So, Kerry, how much copper does Generation Mining actually control at its Marathon Copper Palladium project in Ontario?
In our measured and indicated resource, there's about 1.1 billion pounds. It's not all in the reserve because there's 2 satellite deposits that we didn't bring into the reserve. So they will be mined at some point in the future. But we're looking at doing 42 million pounds of copper a year, as well as a significant amount of palladium and platinum and some gold and silver. And what's interesting is that if you just take the other elements, the non-copper elements in there, that 42 million pounds that we're going to produce a year will be produced at a negative cost of almost $2 a pound because of the byproducts. That's how rich this deposit is.
Why don't you outline the other 4? Obviously, palladium is one of them. What are the other metals you're hoping to mine?
So the most significant one is palladium. We're going to be doing about 168,000 ounces a year of that, another 38,000 ounces of platinum, and smaller amounts of gold and silver. And the gold has actually been streamed to Wheaton Precious Metals. They've done a $240 million stream to help out with our construction costs. And they're going to be getting the gold at at their regular streaming rate of about 22% of the spot price. But that's going to save us over $200 million in CapEx.
And what's interesting about this project, obviously, is that it's shovel ready. You guys have your permits. Tell us about the CapEx and the timeline that you guys are working with.
So we got our permits last summer. It took us longer than we planned, and that was disappointing and expensive, but we got it and we're there. I believe we are the only unbuilt permitted critical mineral mine in the country, in Canada, and maybe even in the United States. So that's a big moving advantage. The CapEx in our most recent feasibility study was just under $1 billion Canadian dollars, or about 700 million US dollars to build this mine. And that would be spent over just under 2-year period. We're hoping to start this coming summer if we get all the financing in place. The next thing, of course, is where's the financing going to come from? And we have been working really hard at that, and we're getting very close. So we've got the 200. We've already gotten $40 million from Wheaton. We're going to get another $200 million from them. We have a syndicate of banks with the term sheet to give us 400 million US dollars, or about 540 million Canadian dollars. And that is the next step in our big news flow is to announce that the banks have given us credit approval, which we're hoping to get early this spring. There is a variety of government funds that are earmarked for critical minerals, and we've been negotiating with them, and we think we're going to get a very significant amount from them. That will be announced at the same time as the credit approval. We are, of course, going to lease equipment from Caterpillar, which will lower the CapEx by could be as much as $100 million there. And then we are going to need to do a little bit of equity, but it's not as much as people think. There's a good chance it's not even going to go to the market. We've been talking to some strategic partners about doing that, and that could be so there may not be another financing. As you know, we did a financing a couple of weeks ago for $34 million. It was 3 times oversubscribed, and that's the kind of market we're in.
I saw that. Yeah, congratulations. With respect to the government, of Ontario, what have they said? I know there's been a few press releases about them, but what can you say about that?
Well, they both federal and provincial governments have absolutely endorsed this project. We haven't gotten any help funding-wise from the provincial government. We're talking to them about it. They're putting a lot of money into things like there's Ring of Fire, but we're saying, well, we're ready to go now, and we don't need as much infrastructure as they do. So this is something that we need to be talking about, and we have been talking to them, but they have certainly come out and endorsed the project, and as have the feds.
Yeah. So just from a chairman's perspective, what differentiates Marathon, from the hundreds of copper projects globally?
First one that comes to mind is, of course, that we're in Canada and we're on the Trans-Canada Highway. Very accessible, got strong government support, strong First Nations support. We've got a fresh feasibility study done by Ausenco, probably the top company in the copper business worldwide. We've got a team of people that we have assembled who have built mines in Ontario before, and we've just announced some of those as well. So we're really ready to go.
Yeah. Can you expand on the feasibility study for us a little bit? Just give us kind of the high level.
The feasibility study contemplates a 27,000 ton per day milling operation, an open pit mine. It's a single mine. It produces a single concentrate, which is great. It saves you a ton of money in shipping costs, and copper, of course, has one of the lowest treatment charges at smelters compared to other metals. So we have a deal with Glencore in Quebec, and they recover all those metals. Not too many of the copper smelters do recover all the metals that we're going to be producing. So it's going to be a really great relationship.
Governments around the world, they're all pushing to develop these domestic resources of critical minerals. When you look around at the landscape, do you see any, big competitors in Canada and US globally that have some of the advantages generation does?
Not very many. And the thing about copper mining is it's not really competitive because it's in shortage, and it's going to be in shortage for the next many years. Of course, they're trying to develop a lot of different projects around the world, but they don't they don't get developed very quickly. They take a while. Some of them take 10 years. This project was discovered in the 1960s. The first feasibility study was done 15 years ago. So it does take a long time to get these developed, and that's the bottleneck.
Looking out, Kerry, there's always risks in mining. In your experience, at this stage of the game for Marathon, what are the real risks?
To me, the biggest risk we face, which is not in our control whatsoever, is metal prices. If metal prices have a major correction, we have a lot of space right now that they can correct, and we've still got a profitable project. But nevertheless, the market sentiment that goes with that could make it difficult. Another thing that could happen, of course, is that there's cost overruns in a lot of mining projects. I don't think we're going to have one because we've redone our feasibility study twice, and we have upped the cost twice, and the costs that we have in there are pretty well engineered. I think that they've done a really good job. So I think we're going to be okay there. The other one, of course, is a major stock market correction or a depression. If we had the money in place, that would be actually the time to be building a mine because the costs of everything would come down.
Yeah.
But nevertheless, those are the kinds of things. There's mostly things out of our control.
Yeah.
I think that anything in our control, I think we have done, and I think they've done a really good job on it.
That leads me into my next question. You guys acquired, you expanded your land package by about 33%. Not too long ago. Talk to us about why it was important for you to secure that ground.
Well, any ground that you've got near the mine that is in the right kind of rock that potentially has another ore body needs to be grabbed up because you want to bring value to the company, and you bring value by having size. And if we have more places to look, there's more likely we're going to find something more. And I think in the long term that the large companies acquiring other companies want to look at long-term reserves. So the more we can get, and we do intend to keep up our exploration program while all this is going on.
And if investors were to focus on just 2 or 3 milestones, for generation over the next 12 months, obviously we've talked about the financing. What would you have them focus on?
Well, the financing first and foremost. The second one is and it won't happen in one moment, but over time, when we announce the continued additions to the team of people, both financial and the technical, the engineering staff, et cetera, that will be building this mine. And then there will be the tender of the contractor who's going to do the construction. And then there will be the start of construction. And we're hoping to see that in September this coming year.
You're hoping to have that tender and to begin construction in calendar year 2026? Yes,
correct. We that construction will start by, improving the road, cutting the trees, starting the earthworks, and then the big construction will be unfortunately starting over the winter. But that's what happens in Canada. Mines get built in the winter.
Yeah, that's right. You guys recently appointed 2 new members, I believe, to the board or to the management team. Do you want to just speak to them quickly, and how will they help you advance the project?
So these two guys are seasoned engineers working together at a past project, along with the third one that we already have on our VP projects. They worked together at another mine in Ontario, the Victor mine, which was about $1 billion mine. Much more isolated than this one. They did it on budget, ahead of schedule. So they've done this before, and they really, I think, wanted to team up again one more time and build one more mine, because these guys have been around a long time. Retirement is not that far off for them. So I think one more mine working together was what their goal was, and that's why they joined us. And there will be more.
Very cool. Finally, Kerry, after decades in this industry, when you look at generation mining today, what are you most looking forward to? I mean, this is also, a bit of a legacy project for you, right? You've been at it for years now, you and Jamie, and you're sort of getting close. But yeah, I mean, what do you look forward to most? What impact do you hope that this is going to have, on the community, on the country, at large?
Well, there's 2 moments in the cycle of a mine that are the two most exciting things, and one is the moment of discovery in exploration, and the second one is that that first bar of metal that comes out of the refinery, and you sell it and you get some money for it. And I've been through both of those, and they're both equally wonderful. So I'm now looking forward to that second one. As far as, and I'm also very proud to be involved in anything that provides a lot of jobs, that provides a change of lifestyle for the First Nations, that they have for the opportunity to go and work and get training. We'll be giving them scholarships. We'll be giving them contracts. We'll be giving them direct jobs, and that's a wonderful transformation to see, to watch a town. And the town of Marathon itself, where our mine is, was facing possible, until the price of gold went up, the end, because the Hemlo mine was looking a little bit iffy a couple of years ago. Of course, now it's got a long life ahead of it again. But the town of Marathon, would possibly cease to exist were it not for another mine like us coming along. And that's a big responsibility, but it also feels really good when it happens.
Absolutely, Kerry. Well, best of luck. I've really appreciated your time, and always enjoy speaking with you.
Yeah, me too. Thanks a lot.